Yesterday, the market once again reminded us why NVIDIA is more than just a stock. It is the heartbeat of the AI and crypto revolution. Pre-market trading indicates cautious optimism, but the narrative behind NVDA extends far beyond charts. This is about technological scarcity, AI workloads, cryptocurrency mining, and the convergence of institutional demand supply chain stress. NVIDIA technical analysis. Right now, NVIDIA is testing the 50-day EMA, which has historically offered support. The $220 to $225 range isn't a T, just a number. It as a psychological anchor for traders, a round figure that attracts headlines and market attention. But let's be clear, this support isn't a trivial technical level. It represents the convergence of massive institutional buying, AI chip scarcity, and crypto miners lining up to secure the most efficient GPUs available. Pre-market activity suggests a potential breakout. If NVDA pushes past $225, the next target is $250. A critical round number that acts as both resistance and a media-friendly milestone. And remember, in markets influenced by AI and crypto, every milestone matters. Headlines are catalysts, but the real driver is tangible demand. Short-term dips are windows of opportunity. When NVDA pulls back, it is a TA correction. It has a chance for investors to accumulate shares before institutional buyers move in. Mining pools, hedge funds, and blockchain-focused ETFs track GPU availability constantly. Every delay in production or supply disruption directly translates into upward pressure on the stock. Fundamentals. NVIDIA's fundamentals are stronger than ever. The H200 GPU pre-orders have exceeded 80% of fab capacity through 2026, meaning that the chipmaker is fully booked. This is not speculative hype. This is raw, quantifiable scarcity. AI workloads, data centers, and cryptocurrency mining are competing for the same inventory. This dual demand creates a scenario similar to a supply chain freeze, but driven by technology rather than fiat currency or market manipulation. Institutional investors are positioning themselves aggressively. Large-scale crypto miners are securing GPUs months in advance. AI-focused ETFs are accumulating shares. Data center operators are signing contracts that lock in long-term GPU supply. This isn't a retail-driven rally. It's an institutional game. Retail investors who chase the stock without understanding this dynamic are merely spectators to an evolving narrative. Supply chain mechanics. The GPU supply chain is under stress. US-China trade tensions and tariffs remain a wildcard, but NVIDIA has mitigated risk by investing heavily in domestic fabrication. These investments create geographic bottlenecks. Production capacity is concentrated in areas less exposed to export restrictions, which creates scarcity-driven pricing power. Each day of production delay translates into millions of dollars of potential missed revenue, and that anticipation is reflected in the stock price. NVIDIA's $37.6 billion cash reserve is another pillar of stability. The company can sustain rapid production expansion, invest in AI infrastructure, and secure raw materials even amid global supply chain stress. CapEx spiked over 200% in 2025, exceeding $3 billion to meet hyperscaler demand. These investments are not optional. They are survival mechanisms in a world where AI adoption and crypto mining are accelerating simultaneously. AI and crypto convergence. Here is where the story gets explosive. NVIDIA chips are not just for gaming. They are the backbone of modern AI workloads and cryptocurrency mining operations. Ethereum miners, for example, require high-efficiency GPUs to remain competitive. AI workloads in hyperscale data centers demand GPUs with massive parallel processing capabilities. The overlap means that supply is constrained while demand grows exponentially. Consider the data center angle. NVIDIA's revenue from its AI segment exceeded $51.2 billion last quarter, a 66% increase year over year. This isn't seasonal, this is structural. AI workloads are expanding globally. ChatGPT-like applications, machine learning models, generative AI, and autonomous vehicle simulations are consuming GPUs faster than production can meet. The scarcity is real, and scarcity drives prices. Coinciding with AI demand, cryptocurrency adoption continues. Institutional miners, hedge funds, and even sovereign wealth funds are pre-booking GPUs for mining and staking operations. These buyers are willing to pay a premium because the cost of being under-equipped is catastrophic. They miss revenue opportunities in a market with 24/7 global demand. Retail investors see volatility. Institutional players see opportunity. Trade, relations, and tariffs. NVIDIA is navigating a complex geopolitical landscape. US-China. Trade relations, export controls, and tariffs create risk, but the company has strategically diversified. Domestic fabrication mitigates immediate risk, while international supply chains are being optimized to avoid bottlenecks. Every day that trade relations remain volatile, institutional buyers are effectively competing for limited inventory. pushing stock prices upward. The H200 GPU export situation illustrates this perfectly. Designed specifically to circumvent restrictions, pre-orders are fully booked, and shipments to China are allowed under recent policy adjustments. This clarity reduces risk for institutional investors, further fueling stock accumulation, price mechanics, and technical levels. Let's talk numbers. NVIDIA stock bounced at $201 in pre-market, supported by the 50-day EMA. Resistance is now at $250, a psychologically significant milestone. If NVDA breaks this, the stock will likely target $275 in the near term and $300 by mid-2026. These aren't arbitrary figures. They are derived from technical analysis, supply-demand mechanics, and institutional positioning. Short-term corrections are possible. Don't be surprised to see 5 to 10% pullbacks. But here's the nuance. These are buying opportunities, not signals of collapse. Institutional investors are using volatility to accumulate shares. Retail investors are chasing headlines, and the underlying fundamentals remain unchanged. AI and crypto adoption continue to grow, and GPU scarcity remains a binding constraint. Scenario analysis. Upside scenario. NVIDIA's GPUs continue to be in high demand for AI and crypto. Supply chain constraints persist. Institutional investors accumulate shares aggressively. Pre-market levels at $220 hold. Breakout occurs past $250, and $300 is reached by mid-2026. Headlines reinforce the rally, attracting retail attention, and the stock becomes a tech sector leader. Downside scenario, tariffs. Spike or export restrictions are reintroduced. Crypto prices crash temporarily. AI spending slows. These events could create short-term pullbacks to $200, $200. However, long-term fundamentals remain strong, and these dips are opportunities for strategic accumulation. Institutional behavior. Institutional positioning is critical. Large-scale miners and hyperscalers pre-book GPUs months in advance. Hedge funds invest in NVIDIA options to leverage AI and crypto demand. ETFs are accumulating shares steadily. Retail investors often see only the volatility, but the underlying trend is driven by strategic institutional accumulation. This is not hype. It's mechanics. Scarcity plus demand plus institutional control cause price appreciation. NVDA is uniquely positioned because it straddles two explosive markets, AI and crypto. No other stock in 2026 has this dual catalyst at this scale. Long-term perspective. For long-term investors, NVDA represents more than a stock. It's an ownership stake in the backbone of modern computing. AI adoption is irreversible, crypto continues to grow globally, and NVIDIA's technological moat remains wide. Even if volatility occurs, the underlying growth trajectory is intact. Think in terms of purchasing power. Holding NVDA isn't guarantee just about capital gains. It's about owning a slice of a tech ecosystem that powers AI, blockchain, and autonomous computing. Unlike speculative assets, these are revenue-generating technologies with structural tailwinds, price target, and strategy. Based on technical, fundamental, and macro analysis, NVIDIA OS price target for end of 2026 is $300. Short-term swings may occur between $220 to $250, but the long-term trajectory is upward. Accumulation at dips, holding through volatility, and monitoring institutional behavior is the optimal strategy. This isn't speculation, it's anticipation. Scarcity in GPUs, explosive AI and crypto adoption, and strategic institutional positioning all point to a stock that could double in value by mid-2026. Closing thoughts. The NVIDIA story isn't just about numbers, it's about a revolution in technology. AI and crypto are converging, creating a market where supply can't keep up with demand. Every correction is an opportunity, every headline is a catalyst, and every institutional move reinforces scarcity. Investors watching NVDA now are witnessing history in the making. Pre-market levels at $220, resistance at $250, potential breakout to $300. These are not just price points. They are markers of an ecosystem under stress, under demand, and under unprecedented growth. NVIDIA isn't just a tech stock. It's a market signal. Every GPU produced, every AI workload executed, every Ethereum block mined contributes to a narrative that is larger than any single investor. And in 2026, that narrative could make NVDA one of the defining tech stocks of the decade. Hold, watch, and accumulate strategically. The game is unfolding in real time. Scarcity is real. Demand is unstoppable. NVIDIA is the heartbeat.